Hi traders, and welcome to the Technical Analysis Market Watch on the 17th of March. So this Friday brings us to the end of a pretty exciting week in terms of movement. We saw some very big moves on the currencies and the indices. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. All right, so we'll jump straight into the Aussie USD here, and you can see that we've basically seen a big reversal in terms of what price has done. We've seen a big move up to around that sort of 67.20 area. The 20 moving average is right there now, so there's serious resistance in front of it, no question about that. But we can see we had a very big move down all the way to that 65 sort of 80 area. Look, the 80s on the currency just seem to play out. They've been doing it for many years now. We've talked about it for a long time, and it just seems to continually play out where a lot of people expect it to stop at the 00, or even on the resistance side of things go up to the 00, which is the round number. But quite often you see this happen where it really stops at the 80 and gravitates to the next point. So it did it here again. Look, there's no question it's a strong zone. But right now we're right at resistance. Okay, we've got very strong resistance right through here around that sort of 67.20 area, which is again the 20-80 rule, like we always talk about. Pushing it now, 20 moving average right in front of it though, but of course the role reversal there is very important as well. How we play this now is really, it's really depending on where the daily closes. If we get a daily close above the 20 moving average and above that sort of 67.50 area, you'd think that the next move higher is going to be really close to that sort of 68-80 area again, the 80 zone, which is right through this area here. But it's got a lot of traffic in front of it, right? It's got the role reversal zone, it's got the 20 and the 50 and the 200 moving averages in front of it before it gets there. So my preference here is probably that it doesn't actually break up there and actually reverses and starts pushing down again. Obviously we've got a series of lower highs and lower lows, and that's played out quite nicely. So it'd be good to see it continue on the move down. And what we're going to be looking for in that instance, of course, is a series of lower highs and lower lows on the smaller time frame. So we'll go back down all the way to, say, a 1 hour would probably be my choice here. And if we see a series of lower highs and lower lows, that's when we're going to be looking for the move down. But again, it's strong resistance there, so just be really mindful of that. If, of course, we get a break above that level, then we're looking at a very different scenario, okay? And then we're looking for that move up. So a series of lower highs and lower lows at this area, and we'd be looking to push back down to that 65.80, a break above the 20 moving average, and then we look for a continuation move. But again, I'd be very mindful of that 68.50 level and the moving averages right in front of it. So the preferred trade is the way down, but if we get a daily close above the 20 moving average, a different story. Over to the US dollar CAD now, and you can see that we basically hit that target obviously last week at around that 138.50, and then it sold all the way down to the role reversal zone. It makes it so easy when the technicals are playing the game. It has been doing it really well, and you can see that this line has held up very strongly so far. The 20 moving average is just about there and trying to bolster it up, so just be very mindful of that if you're looking at short, because the 20 moving average is right there holding up this role reversal zone as well. So if we get a daily close similar to the Aussie, if we get a daily close below the 20 moving average, so that would require a move below 136.40. Then we're looking at the next move down, which is around that 135 area. You can see here, I'll pop a horizontal line there for us. That's the line that we're talking about. If we get a break below the 20 moving average, we'd be starting to target around that 135 area. But a bounce off here would not surprise me. Yeah, we've got to be mindful that it didn't make the higher high after this one did. So I'm always conscious that is a sign of weakness, but it is at the support again. So it's very interesting, this level. If we do get a series of high highs and high lows off this level, the first target's going to be that 138 because that was the previous high, and it did fail there. So just be mindful of that. But a daily close below the 20 moving average, and we're off and running again. So that should be good. Okay, US dollar yen. Now, look, this one's been probably a little bit weaker than I would have expected. It's hovering under the 20 moving averages. It's got a lot of work to do to move up. Okay, you've got the 200, 50, and a 20 moving average right in front of it. The obvious move would be down now. But I am mindful that we've had 3 big wicks here, and you can see that basically all of them have pulled up. So it's had a decent crack to try and get past that 131.80 and has failed on 3 occasions now. So it needs to really close below there before we start getting excited about shorting further. If we then get a daily close below that lowest wick, which is around that 131.80 area, then we're not really interested in looking at shorting opportunities. But, you know, you got support right in front of it anyway at 131, so I'd be very, very mindful of that. It's a no trade for me at the moment, this one, because really you got moving averages galore above you and a roll reversal zone, and you got very strong support just below it. So I would actually prefer to leave this one and look for it to break above the moving averages and that roll reversal zone. So if we get a daily close above 135.80 or a daily close below this level here, which is the 131 effectively, that's probably my preference. I think I would leave this middle zone alone. But if you are going to scalp, I'd be scalping between the 131 and also the 135. So it's a big range. So you can definitely get a decent amount of movement in there. But for me, it's a little bit confused. So if you're going to scalp, stay between the 135 and the 131. But if you get a daily close above this 135.50 level or that 131 or 130.80 level really, then you start to look for a big sustained move out of that zone. But scalping in between here and a longer move out of there. All right, onto the dollar index now. And this is a little bit in the zone as well, in the sense that you've got a 20 and a 50 moving average right there, a 200 moving average right in front of you as well. So I'm very mindful that we are congested around this level. The euro is looking congested as well, but the support held up, obviously. We can see the support line that was through here. It hit the resistance level above. In my mind, though, it's probably going to be hovering in between these two zones. Look, you got to go to the euro for the real trade, of course, and it's found support exactly where you wanted it to. So if you were playing the technical game from the support and resistance that we talk about each week, then you're not going to have any problems here. You would hit your targets every single time. The support did bounce off from 200 here, but it finds itself right in front of a traffic jam. You got roll reversals at the 106.70 and 80. Okay. So I am mindful of that there is a lot of resistance right in front of it. But if you're looking for a short, I'd be looking for a series of lower highs and lower lows down back to that 105.40 area. It's absolute scalp. And if we get a daily close above the moving average, the moving averages, then you can look for a short back down to the 105.30, but absolutely scalping inside this zone. So nothing really doing here in terms of that one. Okay, onto the US 500, of course, and you can see that we've had the big move up from the bounce from around that 3,800 level, really. Didn't quite reach the 3,800, but very, very close to it. So if you're able to take advantage of that move down from the 20, you've done well. Hopefully you were. And yeah, once we saw that movement up, obviously, same problem here for this one, really, that you've got the 20, 50, and the 200 moving averages right in front of it. It's a real problem zone, no question about that. And really, you know, 4,000 is also a round number. It's going to give it some issues as well. So really looking for a roll reversal here as well. We can see a series of lower highs and lower lows on this one, and we'll be targeting the 3,800 again. No worries about that. Very, very important resistance in front of it. We've got a roll reversal zone at 4,000 and and all those three moving averages. So until we get above all those moving averages, it's got to basically close above 40.20 for me. If we get a daily close above 40.20 tonight or tomorrow during the US session, then we'd be looking at moving back up to the 4,100, but only a daily close or a weekly close that will be as well, of course, above these levels would convince me that we're going to 4,100. If we're trading on Monday morning below these moving averages, I'd be looking for shorting opportunities on the smaller time frame back down to the 3,800. So you'd be looking for shorts really, because that is a big sign of weakness for this one. So you'd really want to be looking for a roll reversal on a smaller time frame. So on a 1 hour time frame, look for a series of lower highs and lower lows below the moving averages, knowing that they're there on the daily for you, and that should provide all the resistance you need. So it gives us a pretty safe spot for our stop loss just above those levels. But if we get a daily close above the 40.20, then you're looking at a very different scenario, of course, and you're looking for a move up to the 4,100, which would be an ideal move for any scalping opportunity. So pretty good moves on these. Like, hopefully you're able to take advantage of those, because all the levels that we were talking about have held up, even when fundamental news gets involved, like the banks did obviously at the start of the week. You can see that we can still hold true to the technical levels that provide the really, really good support and resistance. So hopefully you're able to take advantage of that. But there's a brick wall in front of it at the moment, but if it does close above it in tonight's trading, then it gives us a pretty solid sign for next week that we're going to be looking for the 4,100 as the initial target. But of course, if it turns around from this point onwards, then the 3,800 is going to be the logical target. Look for a roll reversal zone again, and we know we've got a pretty solid target at 3,800 with a lot of resistance in front of it. So I hope everyone's had a great week's trading. I think we've seen some really good opportunities. Hopefully you're able to take advantage of those, and I look forward to seeing you all next week. Thanks, everyone.